My next guest is John Allison, former Cato Institute and BB&T CEO. A lot of debate on this, and I got to be honest with you. For a long time, I was one of these guys who said, forget about it, let's get rid of Glass-Steagall, no need to bring it back. But when I look at the earnings from these big money center banks, the J.P. Morgans and the Citibanks, it feels to me that they don't have to lend to Main Street America. So consequently, they don't, because they can make more money trading commodities. Is that the way our banks should serve the American public?
No, it really isn't. On the other hand, I don't think government bureaucrats know exactly how big banks ought to be. The irony is that the too big to fail doctrine, which was supposed to be eliminated by Dodd-Frank, has actually created a competitive advantage for these relatively handful of large organizations. There is a cure, however, and the cure is the Choice Act, which has been proposed in Congress, which would allow properly capitalized institutions to get out of Dodd-Frank. And what that would do would put pressure on the large banks because they aren't properly capitalized to actually shrink and getting out of a lot of businesses that don't make economic sense. And that's the rational way to bring down the power of those very large institutions.
John, I've got Peter Kiernan on set with us in the studio. What are your thoughts on this?
Well, I think that's a very interesting idea. Frankly, this notion of too big to fail, I will tell you that one of the things you can look at if you compare the American banks with, say, the European banks, where they did not recapitalize and they didn't have TARP, they're dying over there, whether it's Unicredit in Italy or Deutsche Bank in Germany. We're, on the other hand, very, very strong. Now, I think tinkering with Dodd-Frank is a great idea. I've talked to some of the bank leaders. They don't mind Dodd-Frank so much. Some of the market making and other things got to fix. But I'm not sure we're terribly broken right now. And I think that's the last time you want to try and fix things, is when you're not very broken.
John, in the meantime, go ahead. I'm sorry. Your comments?
Well, Dodd-Frank has been a huge benefit for the very large banks, so I think the banks Peter's talking to, they're very happy. In fact, they're very resistant to change. It's killed community banking. There are thousands less community banks than when Dodd-Frank was created, because the community banks can't afford the regulatory costs. And the large banks have achieved regulatory capture. So if you like Goldman Sachs, you should be happy with Dodd-Frank. If you care about small business lending, which has been creamed in the U.S., then you should be very unhappy with Dodd-Frank.
Right.
It's really slowed economic growth through no venture capital lending to small businesses.
All right, you know what? I'm going to side with you, even though Peter's sitting next to me. He just kicked me in the shin. John, thank you very much. Really appreciate it.